Wow, I had to double take on the date. Today is Monday, October 13th, 2025. Happy fall, y'all. So, normally I open these videos with some sort of rundown on this headline or the noise over here, or the markets are reacting because of this, and we're going to get to that. But we've kind of come up with a new rebrand to kind of group that all together. When all this stuff is going on in the markets, you might be scratching your head and wondering, WTF is going on with the markets? Well, maybe you just want to talk finance, and that's what we're going to do. So we've rebranded this a little bit. We're trying it out. We'd love to hear your feedback. If you love it, if you don't like it, we want to know. But we're going to play with it a little bit. So, along those lines, over the last month, we've had quite a bit of news. About mid-September, the Fed came out, cut interest rates for the first time in the last year. We anticipate probably 2 more rate cuts potentially by the year end, and potentially more into 2026. We've got, Middle East, Israel, Hamas, peace talks going on, hostages exchange. That's fantastic. Unfortunately, we've got government shutdown, which surprisingly, the markets historically just don't care about the shutdown. They don't react good or bad during a shutdown, quite frankly. And then on Friday was an interesting day. Friday, President Trump came out, announced potentially new tariffs on China. Markets reacted quite significantly downward because of that. We saw an 800 plus point decline in the Dow. Fast forward to today, he's kind of backstepped some of that tariff talk, and we saw the markets bounce back significantly, up over 500 points. So the theme today is volatility. Now that we're in October, if you're Lance, myself, John, this is not new to you. This is something that we've been expecting, but we wanted to go out there and share it with you guys that October is historically the most volatile month in the year for stocks. In fact, it's 33% more volatile than any other month there is. When we talk volatility, we're talking big swings up, big swings down. It doesn't have to be just to the downside. It's that whipsaw back and forth. And October takes the cake. We see more 1% moves, whether they're up or down or more, in October than any other month of the year. So we've talked about this in the past, but volatility is the price that we pay, or the toll that we pay, to be in the markets and to get returns. If you're looking at your account statements, hopefully you're pleasantly surprised when you see your statement that we are having a fantastic year. But let's not forget, earlier this year, call it March, April, think Liberation Day, the tariff tantrum. The markets declined very fast and quite significantly. So what this chart tells us is, how often should we expect a decline or a dip in the markets? That first one, 3%, should get a 3% dip in the markets, about 7 times a year. What's interesting about that is, since the markets bottomed after the tariff tantrum in April, we haven't had a 3% dip since. So we are due for it, and we may be in the middle of it right now. I'm going to skip to the middle one. A 10% decline in the markets is defined as a correction. Historically, we get one of those every single year. We certainly got that this year. 15%, that's certainly more severe, but every 2 years we see that. And then the big one, 20% decline or more, that's defined as a bear market. We get that about every 3.5 years. And what's interesting on that one is, if you multiply that out, we should average, 2 every 7 years. Well, this chart is the S&P 500 going back to 2020. We've had 3 20% or more declines in the last 5.5 years, when we typically average 2 every 7 years. So this is very unusual. So COVID, think economic shutdown, markets are down 35%. 2022 in the middle, think inflation, high interest rates, Russia-Ukraine outbreak. This one was a little bit longer and drawn out. From the beginning of 2022 to the bottom, which was weirdly yesterday was the anniversary, October 12th of 2022, the markets bottomed, but we saw a 25% plus decline. And then again here on the far right, tariff tantrum, down 20%, 4 weeks, rip the band-aid off kind of move. But again, three of these over the last 5.5 years, that's highly unusual. So we keep getting, oh my gosh, I'm kind of nervous. The markets are at all-time highs. They can't go any higher. Listen, they can go higher. And in order for the market to set an all-time high, it has to set an all-time high. So we look at this chart, and I'm going to wrap it up on this one. This is a lot. These are bull markets going back to the 1970s. That blue line, you are here. We're 3 years in. Again, yesterday was the anniversary date of the low in the market in 2022. By historical standards, that is still quite young. Some of these go out 12 plus years, but the average bull market lasts, 5.5 years, maybe 6 years, and we're kind of just in the middle. So all those doomsayers, oh my gosh, this can't go on any longer. It can. So we're quite optimistic. We think, October, that volatility probably continues, but we probably finish off the year strong. Certainly interest rate cuts are going to help us as well, and we do think those are coming. But always, thank you guys for tuning in. If you have questions, we're a phone call away. Please let us know what you think about the little bit of the WTF rebranding. Thank you so much for tuning in, and we will see you soon.